Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Friday, June 9th. Before I get into my five charts today, I just want to let everybody know if you go over to earningsbeats.com, we'd love to have you join as part of our free EB Digest community. It's a newsletter that we provide 3 times a week, Mondays, Wednesdays, Fridays. Also takes a name and an email address. So simply type that in there, hit that subscribe button. We'll make sure we get you set up. I like to focus on things like earnings, gaps, relative strength, trend lines, moving averages, those types of things. Try to make it very educational. Also, it's a very quick read. So it comes out 3 times a week, normally 2 paragraphs in a chart. So it's a great way to kind of follow along some of the things we think are important in the market, maybe get to know us a little bit. And that could lead you maybe to want to give us a shot for a no-cost 30-day trial. That's to our paid membership. You can certainly use that button to get that membership started. That does require a credit card so we can get you set up in our system, but you do have 30 days to kick the tires and see what you think of our service. I can tell you one thing, our guidance has been second to none over the past several years, but especially guiding through the bear market last year. We called it before the top was in, and once it confirmed, we said 6 to 9 months, somewhere in there. I called a bottom in June of 2022. We did go back down slightly below that in October, but essentially it was a pretty good bottom call. And now we've been bullish ever since, been riding this rally back to the upside. So please make sure you check us out. So where do we stand right now? Well, I honestly think this is the bear's chance. And I want to say it's the last stand. I've been bullish all along. I believe we're going to continue to go higher. But I just wanted to point out to you on the S&P 500, if you look at this chart, you'll see leg 1 down right to the February low. Then you move back up. That counter trend rally takes us up to 0.2, which was toward the end of March 2022. We go down, we put in a new low. That was in June. That's where I called the bottom. That was 0.3. Made a huge rally into August, printed a lower high. That was 0.4. So we got 1, 2, 3, 4. And then we went down and we put in that final 5th push to the downside. That's where we had the ultimate low in October of 2022. And since then, we've been in this nice rally. But if you look at this as a series of lower lows and lower highs, which is technically what a downtrend is, this is the key lower high at this point. So we had a lower low, we printed this lower high, and then we went to a new low. Once you go to that new low, that previous high is a pretty important resistance level. So let's just annotate this, and I'll show you that right now we are basically right at that reaction high. That counter trend rally went up to 43.22, I believe. We're now sitting 43.09. Of course, it's intraday. I also find it interesting that the high close was 43.05 and change. And when I look at this chart, today's open, actually this is showing, oh, that's a weekly open. Let me just show you the daily chart just for a second so you can see what the open was today. The open today was 43.0488, just beneath that key breakout level. What I do not want to see is a long tail to the upside and a pullback and a close beneath 43.05. That would suggest to me a false breakout, which in the short term is a problem. 43.0520 was that high close. The intraday high was 43.2528. I thought it was 43.22. I was thinking that earlier. I sent out a message to members. Anyway, 43.25 was that intraday high. Today's high was 43.22 and change. So we opened right at the key candle body resistance, and intraday, we traded right up to the key intraday resistance. Both of those levels now have been tested. If we reverse here, going into option expiration week next week, I think in the short term, that's problematic. So I would be a little careful. I even told members, I think in my show yesterday, Trading Places Live, that if you're up around 4,300, and you've been in the S&P 500 on the long side, think about taking profits. This is the area where you want to take profits. This is the area where the risk lies. So moving back into cash and kind of watching, or just making sure you're out of leverage. I don't really like leverage when we're battling key resistance. Once we go through, that's a different story. We could have a melt up. This market could go one of two ways here in the short term. We could get this breakout, and this is literally the short's last stand. I believe you'll see a lot of short covering if we don't top here. And that could be a melt up. So that's one possibility. The other possibility is that this is a key top, and that we move back, maybe a 20-day test, maybe even a little bit more. There is a ton of net in the money call premium right now as we head into option expiration next week. So anyhow, just keep all that in mind and just recognize that this is a critical junction for the market. I believe even if we pull back short term, we're going to come right back and sail through that 4,300 level. This is the level where there's additional risk. And that means you got to be a little bit different or a little bit more cautious with your trading. QQQ. Now, we clearly have already passed that August high. So the lower low, lower high, lower low, lower high, lower low. We've already taken it out on the QQQ. We took out that August high several weeks ago. Not a problem. But this area right around 360 was a problem for the QQQ. And if I annotate this, you will see that 360 level. And guess what? Today's high, almost 358. Coming off of these lows down around 100 points ago. So we've made this massive rally, gotten back to a pretty critical area of resistance for the Qs. And let me show you one other thing here that I think you got to be at least aware of. If we don't make the breakout today, QQQ on this move up, trying to break out above these recent highs, it's failing. And look at the daily PPO rolling over. Short term, if we don't rally this afternoon, this is bearish. If the QQQ finished right here, I think you can short it. I'm not a short fan in an uptrend. But if you're going to take a chance, this would be a good time. Again, why? Well, number one, if we break back out to new highs, you can cover quickly, get out of any short. Number two, the PPO rolling over. It's telling us that we're running out of short-term momentum to the upside. And number three, options expire next week. Do you know how much in the money call premium is out there right now for companies like Apple and Microsoft and Nvidia and Tesla and Amazon? I could go right down the list. All of these mega cap, large cap, tech, consumer discretionary, and communication services names, they all have a ton of in the money call premium, telling me that there is substantial risk for a short-term pullback next week. So I would just say this, if you're short or you're bearish, I actually think not a great close today sets you up for a short-term trade with a tight stop. Because again, if we go through this level, it could be a melt up with the shorts having to cover. So I would want to be one of the first ones out. Next up, IWM. So this was a trade that we've had on at Earnings Beats here recently. When we were consolidating here, a lot of folks didn't understand it, but I said, hey, this is a great time to accumulate the TNA, which is a 3 times leveraged ETF tracking the IWM. And you look at the chart and you're like, what in the heck? Why? Downtrend, you still haven't had a breakout. You had a false breakout. Well, what I can tell you about these 3 months is that small cap growth was crushing small cap value. So while the price action on the surface maybe didn't look so good, why in the heck was Wall Street, or the Wall Street firms, moving from small cap value into small cap growth? Why would you do that? Right before a big move to the downside? Makes no sense. No, money was rotating in bullish fashion, preceding what I thought was going to be a major breakout. And we've had it. It's been a huge run. The TNA is up like 20% in the last 6 trading days prior to today. So I sent a memo out just a little bit before this recording to our members, and I said, I'm out of the TNA. Not because I don't think it can go higher, but we have moved into an area of more congestion, number one. And number two, is the IWM going to go higher if the QQQ and the Spider fail and they both pull back? I don't know. Maybe they do. But my point is the risk is higher now. And once the risk starts to escalate, I take my leveraged profits. Listen, you can get out of the TNA and move into the IWM. And if the IWM, if Russell 2000 keeps going up, you still make some more money. You're just not leveraged from this point. But more importantly, if we do see a pullback and the IWM loses a little bit of ground, I think there could be a great opportunity to move back into leverage down around that 180 level. So these were 3 index charts that I really wanted to focus on today. One other thing I wanted to point out, before today's open, I pulled up this sector summary for the last week. And of course, energy and materials are leading. Those are 2 what I call neutral groups. But among our aggressive groups, industrials have been the best. And so I went in and I started looking at some of the industry groups within the industrial area. And here are 2 that I think are really starting to show some promise. The first, diversified industrials, making this breakout. You can see we topped all the way back in January at 570. Lots of sideways consolidation, lots of threats of a breakout above 570 with failures. Well, earlier this month, we made a big breakout. That's not a failure. That's a clear, nice hollow candle breakout after months of consolidating sideways. I think that's a bullish move. Maybe we pull back to the 20-day moving average and to this 570 area, but I think that sets up an opportunity to enter stocks within this group. Now, if you want to know about stocks within this group, then you go into the diversified industrials. Within here, click on industrials. This will take you to all the different groups. And then you can look for diversified industrials, pull that up, and then sort these stocks in scooter order. Find out the leaders. GE, one of the top stocks, actually the top stock, according to the scooter rank. But all of these, maybe above 80, 75 to 80 or so and higher, are stocks that I might consider based on the fact that the group has broken out and these are leaders within the group. The other one that I think looks pretty good is the industrial suppliers. This one hasn't made the breakout, but again, look at this huge move into February. And then look at this sideways consolidation now for 4 or 5 months. A breakout, definitive breakout above about 590 to 592 would be very bullish. And then again, for the industrial suppliers, you just go in here. There's the industrial suppliers. Click on it, sort it by your scooter score. And here are your leaders. Again, I'd probably stick mostly with 75 and above on the scooter score. But that's how you can find strength, find strength at the sector level, look down at the industry group level within that sector, find the areas that look strong, have bullish setups, and then be prepared with individual stocks that are leaders within those groups. Anyhow, that is essentially what I wanted to go over today. I appreciate everybody tuning in. Again, I would love to have you go over to Earnings Beats and sign up for our free EB Digest newsletter down here with just a name and an email address, no credit card. You can unsubscribe at any time. Or if you want to try our service, and I tell you, any of our members that have been members for the last 18 months are really glad they've been members. You can start your 30-day no-cost trial. Check all of it out, everything we do. We do a tremendous amount of work, tremendous proprietary research, which has enabled me to make some of the calls that I've made with the conviction that I've had. I keep all of our members informed with this information. Check it out for 30 days. This is a critical time in the market. You can use some help, maybe a little coaching, maybe just a tweak here or there to your own trading strategy. I think it all could be very helpful. Anyhow, again, thank you so much for listening. Have a great day and happy trading.